Hello and welcome. Today we will be looking at the differences between a day trader and a swing trader. If you are also a trader, please leave a comment below saying which type of trader are you and why do you prefer this style of trading. Please leave a like and subscribe as well, as it will greatly help us to grow. Please watch till the end of the video for additional tips to be a better trader, and let's get started. We begin by looking at day trading. A day trader usually works alone and have the freedom to trade as much or as little as they choose. However, day trading is a full-time job, as you will be on a constant lookout for opportunities to enter and exit multiple trades a day. This goes without saying that it is more stressful to be a day trader. A day trader competes against high-frequency traders, hedge fund managers, and other professionals, and thus require ongoing expenses in state-of-the-art computers, subscribing to platform live quotes and market data to help them in their trades. The high volume of trades will also command higher commission expenses compared to a swing trader. One thing I love most about being a trader is that you do not require an expensive education to be successful. However, a day trader requires a certain level of expertise in technical analysis and charting pattern recognition to be able to trade properly and confidently. Since day trading is intensive and stressful, you must be able to remain calm and be in absolute control of your emotions. As such, you must also be prepared to walk away with 100% losses. It is not possible to have all winning trades, so having a good trading plan is essential to preserving your psychology. Next up, let's look at swing trading. Unlike a day trade, which usually close within the same day, swing trades are open across a longer duration, like several days to weeks or even months. Although a swing trader can expect higher profits, they do hold more risk, since the trades are open across a longer period and is at the mercy of gapping prices and sudden news announcements. Margin requirements are higher for swing trading due to the higher risk, and the leverage offered by brokerages reflect this. Maximum leverage for a swing trader is about 2 times of the capital, but day traders can have up to 4 times more. Again, the higher risk for swing trading can result in higher losses. You will require a good trading plan likewise to preserve your trading psychology. As part of your trading plan, you can set stop losses for each trade. This beats having to closely monitor all your open positions like a day trader. Swing traders can be part-time traders with a primary source of income that they can use to offset any trading losses. Since they do not compete with market professionals, they also do not require powerful computers and costly platform subscriptions. At times, all trades can even be done on a mobile device. Capital requirements will vary no matter if you are trading stocks, forex, or futures markets. Day and swing traders execute their trades with different timing and priorities. With that said, one trading style isn't better than the other. It just suits different needs and personalities. A day trader is probably more suitable for someone who wants to treat trading like a full-time job and earn multiple smaller gains throughout the day. A swing trader will prefer a more relaxed way of trading, letting their profits run across a longer duration. And they may not want to be a full-timer as they are committed to another job. Glad to see you make it this far. Now we shall look at some tips to be a better day trader. First up, you must be committed if you want to be a day trader. This means commitment to everything, including the daily grind of screening of stocks, due diligence research, watching the charts throughout the trading session. You will also need to master and consistently sharpen your technical analysis and charting skills. Do not force a trade. Even though this applies to both types of traders, a day trader may become impatient and lead to the compromise in judgment, causing mistakes in an eagerness to trade. If you make a wrong trade, be ready to cut losses as soon as possible. Start small and focus on 1 or 2 stocks that you have prepared for. Avoid penny stocks if you can, as they are usually volatile, easily manipulated, or illiquid. Timing of your trades is more critical compared to a swing trader. You have a very tight window and pull the trigger to get in or out decisively. If you need to cut loss, you can put a limit order to close the trade right when you open the trade. This helps you to execute the cut loss as planned, without your emotions getting in the way later. Lastly, keep cool, keep calm, and carry on with your plan. A level-headed trader will make better decisions. Now let's look at tips for swing traders. Before the market opens, be prepared with your shortlisted stocks. All the research must be done, and be ready for the market to give you a signal to enter. Go with the flow of the market direction. It is not wise to go against the market unless you have identified a reversal signal and it has supporting news. Be careful of fake outs as well. Be aware of sector rotations as market can change direction quickly. Try to track stocks across several sectors and read the news for any hints of sector rotations happening. Have a balanced portfolio of stocks. If you have all your stocks from a single sector and the market moves, all your stocks may turn red and you will be stuck holding on or making huge losses. Every time you enter a trade, you must have your exit strategy in place. This trading plan is your guide for both day and swing traders, but swing traders may have a tendency to become greedy and hold on for hopes of bigger profits. Take profits just before it hits the target. You can also take profits in parts to preserve your trading psychology. Do not regret the decision to take profit. A bird in hand is worth two in the bush. Swing traders sometimes hold on for too long in hopes of breaking even or becoming profitable. Be willing to cut loss and move on, as it may be a waste of time and better to just let it go. I hope you have enjoyed this video. Check out the summary in the shorts video by clicking the card on the top right hand corner. I will also leave a written summary in the description below for further reading. Please leave a comment below and share your trading style. It will be great if you can leave a like for this video and subscribe to my channel to help it grow. Check out my other videos, and as always, thanks for watching.